In this video, we're diving into the top-performing equity ETFs in the U.S. market for 2024. From broad market ETFs to sector-specific ones, we'll look at their performance and what made them stand out. This information is for educational and entertainment purposes only. Past performance is not indicative of future results, and we do not recommend buying or selling any of these ETFs. Figures shown are for indicative purposes only, and the expense ratio is already accounted for. You may want to check their assets under management and dividend yield before making investment decisions. We have tried to identify the popular ETFs. Let's first look at ETFs tracking the S&P 500, which give investors exposure to some of the largest U.S. companies. These funds have performed well in 2024, with an average return of around 27%. SPY, the SPDR S&P 500 ETF Trust, had a return of 26.85%. Other popular S&P ETFs, such as VOO, the Vanguard S&P 500 ETF, 27.08%, IVV, the iShares Core S&P 500 ETF, 26.92%, and SPLG, the SPDR Portfolio S&P 500 ETF, 26.93%. The S&P 500 provides stability by offering broad market exposure to top-performing companies across various sectors. And while its returns might be lower compared to riskier assets, it tends to fare better during market corrections, cushioning portfolios with its diversified and resilient nature. Now, for those seeking more tech exposure, the QQQ ETF, which tracks the NASDAQ 100 index, delivered impressive returns. QQQ, the Invesco QQQ Trust, had a return of 29.58%. Meanwhile, QQQM, the other NASDAQ 100 ETF, performed slightly better with a return of 29.67%. The NASDAQ 100 often outperforms due to its higher exposure to technology, which drives strong growth. However, during market corrections, it tends to experience greater volatility and larger declines. On the other hand, the S&P 500 provides stability to the portfolio, balancing the NASDAQ 100's growth potential with more resilience during downturns. Next, we will look at some of the other popular ETFs from broader markets or specific sector focuses and see how they compare with S&P 500 and NASDAQ 100 index ETFs. VTI, the Vanguard Total Stock Market ETF, returned 26.04%. VUG, the Vanguard Growth ETF, delivered an impressive 36.99%. VGT, the Vanguard Information Technology ETF, returned 35.16%. VUG benefited from its focus on growth stocks, particularly in tech and consumer sectors. IWM, the iShares Russell 2000 ETF, had a return of 13.81%. IVW Shares S&P 500 Growth ETF saw a return of 40.41%. The IVW ETF, which tracks the performance of the S&P 500 Growth Index, has demonstrated strong performance, driven by its focus on high-growth companies within the S&P 500, particularly in the technology and consumer sectors. XLF, the Financial Select Sector SPDR Fund, had a strong return of 30.70%. SMH, the VanEck Semiconductor ETF, stood out with a massive 49.73% return. Meanwhile, SOX, the iShares Semiconductor ETF, had a more modest return of 20.94%. SMH provides global exposure to the semiconductor industry, while SOX focuses primarily on U.S.-listed semiconductor companies. SMH's strong performance is primarily attributed to its higher weightage in NVIDIA and Taiwan Semiconductor, which have shown strong performance in 2024. Both SMH and SOX ETFs track the semiconductor sector, offering exposure to leading semiconductor companies with a focus on growth and innovation in the industry. SPMO, the Invesco S&P 500 Momentum ETF, returned 50.09%. SPMO focuses on momentum stocks. those showing strong uptrends, and it captured some of the best growth in the market. MAGS, the Roundhill Magnificent 7 ETF, had an impressive 71.29% return. MAGS is the first ever ETF to track the Magnificent 7: Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla. These stocks have been among the most influential and high-growth companies in recent years, and MAGS captured their incredible performance in 2024. In conclusion, 2024 has been a fantastic year for equity ETFs, with both broad market and niche sector funds delivering strong performance. While the S&P 500 ETFs provided solid, steady returns, specialized funds like those tracking technology and the Magnificent 7 stocks really stood out. Remember, this video is for educational and entertainment purposes only. Past performance is not indicative of future results, and we do not recommend any specific investment. Subscribe and hit the bell icon for more informative content in the future.